Good morning. How are you all doing? Sorry, clearing my throat then. I meant to press the mute button. I didn't. Sorry for waking you up with a... How are you all doing? I was just reading through the news, which was why I cleared my throat, because I was just going to talk about the ECB. Morning, everybody, by the way. Ian, Baggy, Michael, Amy, Christian, Laceron, can't say it properly, probably. Virginia, Jerry, Danny, Monkey, Evans, Andres, Ladder, John, Martin, Dev, morning. How we doing? So, overnight news, we've had Vilroy talking this morning. At this point, further rate hikes are not the right thing to do. That was at 10 to 7 this morning. The euro had a little bit of a pop this morning. So I'm assuming that was off of that comment, but I got out of my Euro CAD. I posted it in Telegram this morning. I just got out of this one. I've been holding it for 4 days, and this is the target basically on this one, down to the propulsion gap basically, as you can see. Easy target down here. So that was where I was aiming. We had this really big spike suddenly came in this morning, kind of out of nowhere, and I was just happy to be watching it. So I just basically closed it out because I wanted to bank something as well. But we've had a reversal on it now. So obviously this news event obviously changed the structure, but we've pushed straight back into this accumulation. What I'm worried about is a continuation to the upside. I don't think it's going to happen because I think oil prices are going to rise, which is going to help the CAD push this back down again. But 4 days, and it's not really going anywhere. If you look at where I got in on the H1 mean reversion entry, the only reason this is actually where it is now is because of that news event. If that news event hadn't have happened, we wouldn't really have gone anywhere. So it did happen, obviously. But so yeah, decided to get out of that one this morning. So that's the overnight news. We've had this morning, the Bank of Japan contemplates raising fiscal year price outlook to near 3%. So they're looking at their inflation estimates being 3%, which instead of 2.5%. So in a normal world, that would have a positive impact on the yen. It seems to have had a bit of a whipsaw and a slight weakening of the yen. I can't quite tell at the moment, but I think this was more likely just a push and a pullback. So it is bullish news that for the yen. But as we know, the yen after that move, whether it was an intervention by them or whether it was something else that they caused, hasn't gone anywhere, has it? It hasn't pushed up though. So, interesting, but we'll see. We'll see what happens to that one. So that's your overnight news. Not an awful lot. Today, there's no news. We've got the ECB President Lagarde speaking, and we've got Waller speaking this evening. So that's it. So there's no news today. A wipeout. Same as yesterday. And yesterday, obviously, was a bank holiday in Australia, in Canada, in the US, and Japan. So yesterday, we did have a bit of movement yesterday. The US session was pretty aggressive. Yeah, this is more slippage than anything else, but yeah, big move yesterday on the indices. Was not expecting that at all. I was expecting a very quiet session. If you look at where the open was, which is there, we had a bit of a whippy open, but then it absolutely screamed off in the afternoon. So yeah, big move up yesterday on all the stock indexes. DAX as well. DAX didn't fare quite so well yesterday. We are trying to complete the gap up this morning, if you look. So this morning we got a gap up on the DAX. They came back down to try and fill it, and it's rallying up again. So we've got the gap fill to the upside to do, and we've got the gap fill to the downside to do. So today's really, really tricky. There's a very good argument for doing something like that this morning, which won't be great if you're using a hedge, but we'll see what happens. So we've got 3 minutes to the open. But yeah, funny price action with that big gap down. We didn't manage to get anywhere yesterday at all. We had a rally at the end with the US, but yeah, looking for the gap fill this morning. So upside target you can see is this dotted line here, which is the high from yesterday. Sorry, the high from Friday. So that will be the gap fill complete. And then obviously we've got a downside gap to do. So tricky. If we break that high, though, there's a little bit of potential resistance here. Other than that, it's straight up into the previous week's highs. So lots of upside. Downside is obviously going to be yesterday's low. So we'll see where we go. Yeah, there you go. Morning, Guna. Morning, Joe. Morning, Prince. Morning, JC. Morning, Day Trader FX. Morning, Bradley. How are we all doing? So closed out yesterday. I didn't close anything yesterday. Wasn't enough movement yesterday to warrant anything being closed. I was toying with the idea of shutting that Euro CAD down yesterday all day. I kept seeing it it rallied obviously down, and then we kind of flip-flopped around down here, and I was toying with the idea of closing it last night. That made the decision for me, basically, coming out of that propulsion gap. So other than that, I've got the US dollar Swiss, which I was looking to close out as well. That's a short. It's had a fair old move down. My TP is down in this propulsion gap. I don't like the fact that we've bounced out the top of this propulsion, but we've bounced into propulsion, so I'm hoping that they will drive that down today. As I say, there's no news catalysts again today. So today's price action is just going to be price action. There's nothing going to influence it with the news. Tomorrow is the big one, PPI, and then we've got FOMC tomorrow evening. So tomorrow is all the news catalysts for the US. So I wouldn't be surprised if today we kind of just see something like that. But they may well move it. We'll see. But I'd be surprised to see any ADRs on it today. Right, let's watch the open. We got 30 seconds to go. Up here. Afternoon, morning, Hennes. So gap fill pretty much done at the moment, really. If you look at it, that's kind of the gap. And obviously that is the Friday high. So rallying towards it at the open. So we'll see where we go. There we go. So long on the DAX. Morning, Peter. The stuff with Hamas and Israel obviously is going to have an impact on the markets as well. So we need to just keep an eye on the escalation there. If that does spill out from Israel into neighboring Jordan, other places, it's going to be quite tricky because the US have vowed to back Israel. And obviously there's a lot of countries that aren't as sure, Russia being one of them, obviously. So we could have any point, if you look back to where Russia kicked off with Ukraine, you get lots of red news coming through on Financial Juice news about it. So we had one last night, Hamas official, we're open to discussions over a truce with Israel. You know, so all this sort of red news coming in will spike the stock market specifically, and oil. So those are the two things you really need to pay attention to with what's going on over there. But you'll know it before you know about it, if you know what I mean. The price will move on the chart and you'll be like, what was that? Then you'll find out what the news was, rather than seeing the news and being able to react to it. It all happens far too quick. There's nothing you can do about it, but you just need to be aware of it. A little bit of a lackluster open, but we are off to the upside. Morning, Tom. Morning, Peter. Morning, Daniel. Thoughts on GJ having a bit of a drop? I don't know. I would expect all the yen pairs today to have a bit of a drop off the back of that inflation news, but doesn't seem to actually have had a positive reaction to it. So normally, I mean, it's just a forecast. It's not a number. So all the Japanese are saying is we think basically it's going to go up from 2.5 to 3. So inflation is bullish for the currency, but it is in the next fiscal year, they're saying it might go up by 0.5%. So I think that whipsaw that you just saw was just a knee-jerk reaction to it. It's like, oh, and then it's like, actually, no. So don't know. But all the yen pairs basically have kind of undone that initial little spike we had. So, yeah, we'll see. The one that isn't is the US dollar. So that's holding firm at the moment, but we will see where that goes. Don't know where the yen's going at the moment. It doesn't know where it's going. It's not particularly strong, but it's not massively weak either. Market's unsure. Yen pairs, I don't know if the yen is safe at the moment. Morning, Kennelly. Your safe havens, typically the yen, the Swissy, things like that. World's changed since COVID. You do still see money rushing into them when there's crisis happening. Whether or not that's going to continue to happen, don't know. I would say the Swiss franc is probably the safer bet at the moment. But you know, it's difficult to tell. Very difficult to tell what's going on at the minute. Okay, DAX is out the highs. Gap fills complete. So we're looking at Friday high as next target. If we do get through that Friday high, we've got a clear run. Yeah, we'll see. I'm going to do a video on this today. That's today's job, assuming nothing else happens, is to get the video done on the hedging strategy and all the EA inputs and everything. Don't think we're going to get there this candle, are we? So there's your 5-minute open. So if you're taking the 5-minute opening range break, there it is. And you are long. Okay, so this is an important candle, this one, because we're going to start to see some orders triggering at yesterday's high. So we'll see how many buyers we got on the side today. If they can get through, we should be off. Sitting about 3% profit on the yen, but still holding it. I reckon it would be a good idea to take profit or wait for a potential second intervention. Well, is this an intervention? It looked like an intervention when it happened. It was an intervention. There was an intervention. Yeah, that doesn't happen because nothing is happening. That happens because somebody's done something. They've intervened. But a normal intervention, a proper intervention from the Japanese will be them buying up loads of yen and driving this. So that is questionable as to whether that was the case or whether it was just a large buying spree to shock the market into stopping what it was doing, basically. So stopping the rally, which it did, obviously, as you can see. It's had the desired effect. The next desired effect is that whether that happens or not is going to be based on the US PPI, CPI figures coming out over the next 48 hours. We've got two major news events. We've got PPI, we've got FOMC, and then we've got the CPI figures tomorrow. So, yeah, tomorrow. No, Thursday, sorry. So, yeah, that's what's going to drive it. So if we get positive tomorrow, bullish from the Fed, and then inflation goes up, that US dollar's going up. There's nothing anyone can do about it. Whether or not that kicks the Japanese into a next move or not, it's down to the Japanese. You know, you can't. Nobody knows what's going to happen. We didn't know that was coming, did we? Well, I did. We knew it was coming. We didn't know when. This is the thing. This is what I keep saying all the time in the bootcamp, isn't it? Bootcamp is all about one thing: the fact that you cannot time this market. If you can't time something, how can you have a strategy to time it? Every strategy on the world is all about trying to time an entry. That's the one thing no one on the planet can tell you, when to time an entry. So every strategy is useless, because if we knew when the market was going to move, we would get in and do it, wouldn't we? We'd be billionaires. So you can't time it. You know something is likely to happen because a set of circumstances fall into place over and over again, but you never know when. So it might be a case of we need another nudge for the Japanese to actually wake up. However, if they're going to be fighting a strong US dollar off of high inflation figures, and the Fed are coming out saying we might have to put another interest rate rise on, that's going to be bullish for the US dollar. So it's going to be a hell of a fight, isn't it? Again, I keep talking about the circumstances that we're in at the moment. We haven't been in this situation ever in the world. We haven't come out of a pandemic off of the back of going into a war. We haven't had inflation rising at this rate. We haven't had 18 months straight interest rate rises. We haven't had oil and energy prices soaring to the levels that they are so quickly. You know, there's a lot of we haven't had before. So what's happened in the past is when the market conditions in October last year were as they were, interest rates weren't as high. Prices for oil and gas and everything were as high. In fact, they're 30% higher at the moment. So what is going to happen and when? Who knows? No one knows. But we know that the Japanese cannot sustain any more run against them because it's not financially viable to do so. How are they going to get out of it? I don't know. And whether they get out of it, you know, they may not need to get out of it. If we get negative PPI figures, the Fed go, actually, looking at the PPI figures, we'll wait for the CPI figures tomorrow. If the CPI figures are a freeze tomorrow, we probably won't do anything with interest rates. This is all coming down. Don't know. Tomorrow is the day. We will find out. I were unable to click my buttons today. TP1 just hit on the DAX. So straight in, straight out this morning. Nice and easy. Same as yesterday. Happy days. 2 days on the trot. Straight in, straight out. So trailing a stop, basically at 1.5 hour now, because we're up to 2.5 hour. Somebody was asking about how the trailing stops work in the Telegram group. Hopefully, I said to go and basically look in the strategy tester and you'll be able to see. But basically, the settings that I've got set up here, pretty self-explanatory. So the trailing stops are set at 1 and 2. So basically, multiplier of the range before the trail starts is set to 2 because that's where my TP is. So there's the break. There's my TP at 2R. So what I'm saying is when I get to TP1, start to trail. The multiplier of range size for trailing stop is how much to trail by, 1R. So this is 1R, yeah, 1 range. So each of these lines is an R or a range. So basically, as soon as I hit target, what this setting does is it immediately breaks even and starts to trail by 1R. So when I hit 2R as a target, I am guaranteed a 3R return. Yeah, because I'm immediately moving my stop to 1R, locking in 1R on the second position. And if this continues to go like a loony, or we get a news event that spikes it like crazy, this is just going to lock in a 1R, 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 and it will keep locking in 1R until it hits 5R. And obviously 5R is target. There. 5R should always be just shy of ADR. So shy of where we get to as a max usually on the day. That's the whole point of the strategy, is you're playing within the average ranges. So it's 940 locked in, and 850 locked in, so 1600-ish this morning. Very nice. We've just tapped into a previous level, what I've got on my chart, which is a horizontal line drawn because that's previous previous support level. So this area here accumulated around it there, tapped into it, tapped into it, tapped into it, pushed down, retested it, dropped. So very strong support resistance zone we've just tapped into there and bounced straight off of. So that might be where we start to get some limit triggers. We will see. Looks like that way to me. Should be out of that now. Not quite. So locked in 2R. So that's 4R basically today, because we hit 3R. I lock in 2R on the second position, etc., etc. Outro, took profits at 1.5R. Been in drawdown for ages now. Keep getting taken out of break even. That's what happens with break even stops. Are there to get break even. You only do a break even stop if you're happy to take a break even. If you're not happy to take a break even, don't use a break even stop, because it'll do what it says on the tin. Nice move on the DAX. Have you closed out TP on first position? Yes. Now 4R profit. Typical. Morning, Neo. So we'll see if this holds. This stop strategy that I'm using on this one is I'm 90% of the time it will get stopped out on that trailing stop within 15-20 minutes of the open. It's rare that you get an open that goes bang, 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 bang straight up to target. It goes bang, bang, drop, bang, drop, bang, bang, and that is where you will always get taken out. So I'm using a very tight stop. There you go. As you can see, I've just been taken out again. So there's 4R locked in, $1,800. Yeah. So that is what happens 90% of the time. Every now and again, you'll get a really quick run. So if you want your second trade to have a much better chance at catching a trend day, you wouldn't use a tight stop like I am here. You'd use a weak stop like a 2R, so that it gives it that much room to push up, pull back around a bit, play around, do what it does. Yeah. Or you just won't use a trailing stop. You'll just break even on that second position, which automatically happens anyway. And then just see where you get to, and then it will close out end of day. So there's all sorts of ways of doing it. And again, it's highly configurable, the EA, so that you can trade it as you want to. Yeah. So you can use a stop or not use a stop. Regardless, you're going to always break even on that second position. You've always got to protect that second position. But whether or not you actually use a trailer or not is entirely up to you. It will get to your target a lot of the time. And you will always have it, if you're setting it as you should do, close at the stop trading time. It will always close you out just before the New York session, because the New York session will quite often reverse the AM session. It will also quite often rally the same direction. Yeah, you don't know what's going to happen, but to be safe, if you've got profit, it's locked in, you've got another position that's in profit, take that profit, because if it comes that way, you're going to lose it. But that's always the question, isn't it? Shall I hold it? Shall I let it go? There is no right or wrong answer. Sometimes it'll be right to hold it. Sometimes it'll be right to let go of it. If we knew which one it would be, we would do it every day. Right, so there's Jack's done. Nice and easy break again this morning. Today, we've got no ADRs. So if you look at the price action yesterday, we had a little bit of a drop on the US. There was a lot of movement around yesterday. Gap fill's just completed on the Euro US this morning. So there was a lot of movement around yesterday. We had some decent movement on some things, but we had a couple of ADR hits, but nothing particularly dramatic yesterday. So we're starting to move again today, but there is no news catalysts again today. So any ADRs you get are potentially likely to play out. So worth taking some ADR reversals. Nothing's hit its weekly range yet. We're only on Tuesday. Obviously, there's no monthlies because it's the beginning of the month, but we'll say it's the second week of the month. But so there's nothing to look at on the weeklies. There's nothing to look at on the ADRs today. RSIs, we've got a few 4 hours to look at, which we will go through. Oil. So I took a long on oil yesterday. Wasn't sure if we were going to rally away from the gap. We're not at the moment. So one of the things that is a kind of a weird anomaly with oil, not really an anomaly, it's just what happens. But conflict and war is good for oil for two reasons. One, demand goes through the roof. Yeah, everything that you fire uses some kind of propellant. Oil is refined to make it. Every vehicle you use in the military uses petrol or diesel. Yeah, so planes, everything revolves around oil. So when you get a mass conflict and a mass movement of vehicles, there's a mass demand increase. Second, all the oil pipelines and the control of oil flow around the world tends to go through where we tend to get conflicts a lot of the time. So oil production gets constricted, which means that if you want it and I've got it, you pay more for it. So oil prices go through the roof. We've obviously got the conflict in Russia. We know what impact that had on oil. We saw that very clear. I have to go back because it was a while ago now. But that's what happens when the Ukraine crisis kicked off. Yeah, went through the roof. And then we had an area of, yeah, we're going to charge a load for it. And then it all started to peter off because we didn't have a choice, because we couldn't afford it anymore. Everybody's bills were going through the roof and no one could afford to do anything. So we had to reduce the price of it. We've now got prices pushing back up again to $100 a barrel. And we've got another conflict about to kick off, which could spill out into a wider area and cause a much bigger conflict. And obviously, we've still got what's going on in Russia. So I don't see any reason why we shouldn't get $100 a barrel potentially by the end of this year. So I've been looking for an entry on oil. And as we gapped up yesterday, that was potentially going to be a gap and go. But it looks like it's going to pull back into the gap to start with. So I took one on it yesterday. There's the entry there. That was going to be the gap and go, add into it there, and then obviously off we go. I've got a second pending, can't see it because I'm on the 4 hour chart, but I've got a second pending sitting here, which is on the gap fill, which is ADR today. So push down to ADR today triggers a second entry, which I'll be averaging in there, and then looking for that rally, break that high, enter another position and get 3 longs on it. That's the idea. If it pushes down below this level, below 150 ADR, I will take a decision on whether to scale out of some of it. I've got quite actually a big position on. I didn't want to quite get on that big, but I did. He who dares and all that. But yeah, so that's the plan basically with oil. We'll see if we get the gap fill today. Oil inventories come out tomorrow and 3:30. No, they won't be tomorrow. They'll be on Thursday this week because we've had a bank holiday. Yeah. Oil inventories at 4 o'clock on Thursday this week because of the bank holiday. So the next catalyst for actually moving oil is coming on Thursday, not Wednesday this week. Just bear that in mind if you're trading it. So yeah, so I don't mind if it wants to push down here this week. It'd be nice if we can get this done by Thursday, and then hopefully oil inventories will either double bottom or rally it. Then we'll go from there, but we'll see. There we go. So that's oil. Morning, Ismat. Morning, Amy. Beautiful first starts to the SIHEA. Purchase price already back. Good job. That's what I like to hear. Buy an EA, day one, make back the money you paid for the EA. Good job. That's what we like. Yeah, so we had 2 nice days, actually. Yesterday was a lovely day as well on DAX. Pretty much the same as today. Just lovely, quick 2R. That's why, you know, when I do the video, I'm probably not going to go into all the back testing and everything in too much detail because I've done a lot of back testing on this strategy as well as I do on all my strategies. But there is a reason that 2R target is there as TP1 because it is easy to achieve within 10 to 15 minutes. That's the whole point of TP1 is if we are going to get a break, the break usually lasts 10 or 15 minutes and then we get a little bit of a pullback. Yeah. So the whole idea is that is very achievable. Yeah. If we're using a maximum of 20% of our average daily range, what we're asking for is in the first 15 minutes, a 40% move of the average daily range. No more, that's all we want. Just move enough to show us there's a trend day potentially starting, and then do what you want from there. That's the reason I use that 2-hour target. The 1-hour target didn't make as much money as the 2-hour target. The 3-hour target had a much lower strike rate than the 2-hour target, but was a little bit more profitable. However, I'd much rather be profitable more often than more profitable, if you see what I mean. No right or wrong, personal preference, but that's why I'm using the 2-hour. The 5-hour target is obviously because price moves an average daily range. If you're using 20% as an opening range, multiply that by 5, you're going to hit 100% of your average daily range. So that's why it doesn't go higher than 5R, because most of the time, 5R will be on the normal range of the instrument. It's all logic, basically. But days like today, like I just said this morning, those trailing stops are going to kill you, because you're going to go, oh my God, could have had a lot more money. You could have had, and it could have come all the way back down, and you could have had less money. We knew which way it was going, we would do it. So no rights or wrongs, just difference. But well done. Outro, today would have been that big day I've been waiting weeks for. Love trading, yeah. What can you do? You have losing runs. You have winning runs. You have multiple winning runs in a row. We don't complain about the, oh my God, I've just had... Remember, when was it? I remember about 4 weeks ago, I literally had a run of 7 days. Literally, breakout, target, breakout, target, breakout, target, breakout on every instrument. Literally every instrument. I bagged 25 grand in a week. Just like that. Yeah, they come. You've just got to wait. You never know when it's going to happen. When the markets are volatile and the markets want to run, they will run for days. Just got to wait. The days which it's crap, you sit there and you go, eh. That's the whole point of the SIH strategy. Is the opening range breakout strategy is great, but people are over trading it a lot, and it's very easy to overtrade that range. If it does that at the range, it's very easy to have really big losing days if you don't limit those losing days, which is what we all struggle with. This strategy doesn't have that problem because it only takes 1 trade a day. Either works or it don't. And that's the beauty of it, isn't it? This DAX trade now, I can basically walk away now and not trade this afternoon if I don't want to. I can just go, done it. I'm done for the day. Don't have to trade today for the rest of the day now. That's the whole edge of the strategy. It's like, if it works, you are done. If you want to chance these 3 this afternoon, you could easily have that times 4. You could easily have 3 hedges and have a bloody nightmare to deal with all afternoon. Always the way, isn't it? One or the other is going to happen. Wish we knew. Right, so that's oil. It's obviously out of our control what it does. Those are the 2 scenarios I see, though. Yeah, either that or that. If it does that, I'd be constantly worried about it coming back down to test this. So target at the moment is set there. That is target 1 for that position. This position is going to be a runner up to $100 a barrel. So that's the ultimate target. Morning, Marco. Johannes, on the SIH EA, there are no settings to adjust for 2-digit brokers. Nope. It's all working off of ADR. So the whole thing runs. Yes, there is. No, that's not true. There is one setting to adjust, which is your offset. That's it. So offset distance for pending orders, that is set to 30. If you're a 2-digit broker, you'd set it to 300. And that's literally just the offset on the break. So that's my order there and there. That's set to 30. If it was a 2-digit broker, that would be 300. But at the end of it, it's not the be all and end all. The offset is quite important on rangy days, but it's less important with this strategy, isn't it? If you think about it, because we're hedging anyway. So it's less important, I think, but there is no other settings. No, that's it. the whole reason I made it all work off of ADR and multipliers. Yeah. So this is why everything is either a 1 multiplier, a 200% multiplier, a 10% multiplier, is because ADR is ADR. And it doesn't matter whether you're a 1-digit, 2-digit, or 10-digit broker. ADR is a number. And whatever that number is, we're trading percentages and multipliers of that number. Yeah, so it's much simpler. Much more difficult to do with the opening range breakout EA, because the opening range breakout EA is infinitely more complex than this. Like, massively more complex. It uses groupings of trades and all sorts of things, which is why I couldn't put this into the ORB EA. It's just too complicated. So this is just much, it's a dumbed down version, but the simplest strategies quite often are the best, aren't they? So, right, that's oil. Looks like it's having a bit of a rally at the open. What's the CAD doing? CAD's pushing up a little bit. Yeah, a bit of strength coming through in the Canadian dollar. A little bit of strength coming through in the US dollar. A little bit of weakness coming through in the yen this morning. And the Swiss franc by the looks of things, which isn't going to help my US dollar Swiss. Anyway, if MT4 disconnects from the server, how will the EA behave? Well, it will sit there and do nothing, won't it? Because you're disconnected from your broker. So it can't trade, it can't get data, it can't do anything. It's like saying, will I be able to watch Netflix if my internet goes off? No. You're disconnected. You can't do anything. This is why you always have a backup on your desk. You need to get in or out of a position. You need to be able to get on a network that isn't the internet. Right. RSIs. There's not a lot to cover on the RSIs again today either. Same as yesterday, isn't it, really? Hourlies. There are none. We've got no RSI extensions on the hourlies at all. There were a couple yesterday. I'm going to go through my portfolio in a minute. But there's not, there wasn't a massive movement yesterday, so there wasn't a huge amount to look at. But the 4 hours, we've got a couple. So Euro Swiss is one, extended on the 4 hour. This was extended on the 4 hour yesterday as well. So we are down below the 30 level. We've kind of been sitting down there now for a day, like in these wicks at the moment. So this area is basically the midline of this range. News event happens. We came back down. We've got a gap fill to the upside to complete on the Euro Swiss, and we've got a lot of seller rejection down here. So loads and loads of wicks indicating that the buyers are not letting them go through this level. So first entry on this was on yesterday afternoon in New York. So this was an H1 extension yesterday. M5 reversal alert on the lower time frame. We just had the reversal alert on the hourly, which is holding, which is lovely. So yesterday's low has held. So there's your W pattern. It's not particularly clean, but it's there. So looking basically for a gap fill, which I need to put a target on because I haven't put one on there yet. So gap fill play, 150 ADR to the upside. Probably not going to get there today, but that's the play for me to just do the gap fill, 0.5% banked, done. Euro New Zealand is also a 4 hour extension. So again, lovely double bottom potentially playing out here. There's your 4 hour RSI extension. We did get extended there. You can see the last trade I had on was there. I got into this yesterday as well on the hourly RSI extension. So this was an hourly extension M5 reverse. Sorry, that was this morning actually. Got into this one on that extension there. That's off very nice. I need to put a target on this as well. Yeah, this is a tricky. I mean, this euro is tricky. This is one of those trades where you could really hold this. If you look at where we are, with this double bottom there. Broke structure, came back, retested, and went. We tested this area week before last and had a lovely bounce, which is where I exited that previous H1 mean reversion. Took a second entry this morning on it. Now, if this does turn into a W pattern reversal, the same as we had before at that double bottom, triple bottom, this thing, obviously easy 50% retracement on it, potentially, which is up to this sort of area here, potentially all the way back up to there. Now, the spanner in the works is we keep getting all this news, Bank of Japan talking. Okay, nothing about intervention. The spanner in the works is we've got Vilroy coming out saying things like, at this point, further rate hikes are not the right thing to do, i.e. not bullish euro. So we've got potential for the euro not to rally. The New Zealand dollar is neutral. So there's no bullishness or bearishness from the New Zealand dollar, but the euro New Zealand potentially may just stagnate if they don't increase the interest rates. So if we look at the euro here, euro New Zealand range bound, basically. The market is ever so slightly long euro New Zealand. The fundamentals don't give an edge to either currency at all. We've got retail at the moment as a -2 because they're all buying it. So when the retail crowd flip and decide, actually, no, this isn't a good buy, we'll go short, that pops up to a kind of a 3. So a very weak buy. So there's no real advantage on it at all at the moment. The fundamentals for the euro aren't looking fantastic. So we're at 4.5% interest rates. They're one of the few countries that actually did increase last time. Their inflation's coming down fairly well, fast rate of drop. However, their unemployment is ridiculously high. So if the next unemployment figure comes out as positive, i.e. higher for them, that really stops them putting that rate up. That is massively high. If you compare it to the rest of the world, it's the highest unemployment we've got. So it really puts restraint on this, and them not being able to use this as a tool to manipulate inflation. So it's a very shaky outlook for the euro. However, if it's not positive and it's not negative, that doesn't mean we're just going to sit sideways. It means that there's potential for us just to go into a range or to push up into forming a range like that over the next couple of months. So there is still upside. So I'm in long on it anyway, because it's an H1 M5 mean reversion entry. But if you want to, it's one of those that you could hold, like a nice long-term hold. Looking for a good 3-5% gain on it if you want to. Personally, I'm in out fast banking often. So, but it could go either way, basically, this one. So that's extended on the 4 hour. It's the biggest extension we've got at the moment. Pound New Zealand, very much the same story. If you look at the Pound New Zealand and the Euro New Zealand, charts are virtually identical. So very much the same thing on this one. It's a 4 hour RSI extension. I got pretty much exactly the same trade on that as I did on the Euro New Zealand. Yeah, but this is not bouncing off of a double bottom in the way that the Euro New Zealand was. So there's no technical really on this one that other traders will be looking at and thinking, let's buy it here. So we got this area of support resistance. So we hit that high, came down, accumulated around it, tested it, tested it, tested it, and then we went off. Yeah, this is our first retest of that level. So this could well turn into a W pattern reversal. Again, pound unbelievably weak at the moment. We've got Bailey speaking on Friday, and we've got the GDP for the pound coming. Now, the GDP for the pound is forecast to be a lot higher than previous. So this is only month on month, though. The quarterly figures are more important, but the month shows whether or not we're going in the right direction for the quarterly, which is why we pay attention to them, why they're red. So if this actually goes from this -0.5 up to this plus plus 0.2, that's a 0.7% increase, which will mean that if that continues for another month or so, it's virtually guaranteed we're going to get a quarterly GDP increase, which takes us out of the danger of being in recession, which is bullish for the country and bullish for the currency. So Bailey, after that GDP figure, could well rally the market on Friday. So there's a good chance we might see some strength coming through on the pound. It's really overdue. If you look at all the pound pairs as well, they've been dropping like a rock. So we are due a bit more strength on this pound. You can see against the Swiss franc, totally sideways. So good looking long potential there. Euro and the pound will probably do very similar things, I would imagine. They move together a lot on their own, on each other's news. So, but yeah, good looking long opportunity there. So your 5 or your 15-minute reversal alert has already kicked in this morning. So there's your 15-minute reversal alert and your retest. Your 5-minute, obviously, you've already had that as well, all the way back down there earlier. So good looking long opportunity. You've had an hourly reversal alert as well, which is also retested. Yeah, look at that propulsion gap. So this area of support. Yeah, that propulsion gap is the accumulation break. So that is where they added the short orders. They re-added shorts there. So when you hit that level, you're going to find resistance. That's also ADR. But then we're looking for a pullback and a rally. So that's a pretty good one, Pound New Zealand. Not extended on the hourly, though. So as you can see, I haven't taken that one. Didn't get extended enough, but I'm in the euro. New Zealand dollar, US dollar, that is also extended. To the upside, didn't quite get extended enough for me to take that one yesterday. 4-hour RSI extension and double top. Very, very nice. So very big V-shaped recovery there. Very, very strong move against the US dollar, as we know. No idea what's going to happen with the US dollar over the next 24, 48 hours because we've got tons and tons of important news coming up for them. So this could go absolutely anywhere. But it is at the moment a nice short. You would have been in that if you took it this morning. Did that get extended? If you're only taking the 70 extension, I mean, it's a little bit more tricky, but the last 8 hours. So that would have been today. So that would have been your reversal. The EA would have got you in on that reversal this morning. Yeah, so that would have been the only entry. So that was your entry this morning, New Zealand, US. US dollar CAD and US dollar Swiss. Big rally up at the moment on this one. So this is a 4-hour RSI extension to the downside. So again, we're looking for a nice 24 bounce, which is just happens to be doing. That's a 61.8 retracement on that leg. Yeah, so looking for a push up. Whether or not that continues and we go that way, or whether that market structure holds and we do a new leg down, we'll find out when we get to this propulsion gap. But at the moment, nice looking potential long. So your mean reverting this move here. And US dollar Swiss. I've got a short on this one at the moment, which I'm holding. But again, it's the same story on this. It's potentially a bounce, but we don't know whether it's going to be that or it's going to be that. So it could be either or. I'm looking for the propulsion gap to fill to the downside on this. So I'm just kind of hoping we get a bit of a weakness off of the US dollar today. It certainly looks like it at the moment. The wicks to the upside, strong. So sellers firmly in control so far during the London session. So I'm hoping today we just get that push down so I can get to target, which is within ADR. So it's a nice, easy target down there within ADR. It's just under 0.75% profit. And then you'll be a little bit more extended and embedded on that 4-hour. And you'll be in the area where we bought off the back of the Swiss franc interest rate. So this is where they bought from. If they're going to want to maintain bullish market structure, this is where they will add. So good spot to get into today to confirm that it's the end of the short move. And obviously the bulls are going to take back control, but we'll see. So there's your 4-hour RSI extensions. That's all of them. Morning, Alan. What's the SIHEA? Similar to the ORB? Yeah. So SIH just stands for Stock Index Hedge. It's basically a variation, or it's a more intelligent version, if you like. I suppose that's not the right way to say it. It's a different version of the open, basically. So all it does, it dynamically analyzes the pre-market range. So the OR, I need to do a video on the differences between the two. There are endless, massive differences between the two. They are chalk and cheese. The fact everybody's getting a little confused with the fact that they both trade at the same time and they both look at the same thing, which is the pre-market range and the 5-minute range. Yeah. So adult dating chat, we haven't had them in here for a while, have we? Indian adult dating chat. Not sure I'm interested in that one. So it trades at the same time, but it uses a very, very different approach. Yeah. So the opening range breakout strategy, you specify in the settings, I want to trade the 5-minute pre-market, the 10-minute, the 15-minute, the 30-minute pre-market. You set what you want to trade. Yeah. And then you say, I want to trade that. And I also want to trade the 5-minute range. And I want to trade the 15-minute range. And I want you to take all three of them. And if they don't work and I get stopped out and we break back inside there, I want you to take another trade. And I want you to keep trying to make me money until you hit my target. That's what the ORB EA does. It's designed to keep hacking away at this open. And either it will break clean like it did today, job done, over in 10, 15 minutes, or it won't, and it will stop out, lose, and then try and recover that money and make a profit and then stop trading for you. Yeah. This is a totally different approach. This dynamically analyzes the pre-market range and looks for a range that falls within an achievable target. Yeah. So to be able to hit a target, you need to make sure price can achieve it. Yeah. The problem with the opening range breakout EA, if that pre-market 15 range was, let's say it's 2127 here on the DAX. Let's say the pre-market range was 1,000. Yeah. If you took that pre-market range, because the range was 50% of what it does on a daily basis, for you to get a 1-to-1 R, you have to move 100% of its average daily range, which is going to take it all day just to achieve a 1R. Which isn't good trading. Yeah, 1R targets aren't going to make you money. The other problem with it is if it's moved that much before the market open or at the 5-minute candle, both of those ranges are big, it's exhausted. So what it tends to do is that. So what you end up doing is not making any money and sitting there all day doing nothing. So this version of the EA, you set, I want to trade a range which is a minimum of X and a maximum of Y based on the average daily range of the instrument. Yeah. So if I'm basically saying here, my minimum range has got to be 10% of the average daily range and a maximum of 20% of the average daily range. Yeah. I know that I won't get whipsawed much on them if they are a minimum of 10%, and a maximum of 20% means that a 2R on my trade, it only has to move 40% of its average daily range at the open. Easy. Yeah. It stays within its average daily range 60% of the time, doesn't it? But it moves way beyond 40% of its average daily range often. So this version of the EA makes it more achievable to get the break when the break happens. If the break doesn't happen, and obviously this range will dynamically adjust, so it will look for the right range. So if it's the 5-minute, it will use the 5. If it's the 10, it will use the 10. If it's the 25, it will use the 25. Yeah. So it will automatically look for the right range to trade rather than just the 15 or just the 5 or whatever you set. So it's more intelligent, if you like. Uses artificial intelligence. No, it doesn't. It just follows a set of rules I've set that say, do this. If that doesn't do that, do that, do that, do that. If that doesn't do it, then skip them all. And it would also skip them if they're not right. So if the trading conditions are wrong, it will go, I'm not trading that. Yeah. So it doesn't, it just stops you getting into all the crap. If that break doesn't happen and we go long and then we break short, what it will do is it will hedge you and it will take 2 trades, one long, one short, and then it will go, right, break didn't work today. So let's wait for the price to move a decent distance and then we will get out. So one of 2 things happens. Either price sits there and flip-flops like this. These are the days you will get killed with the opening range breakout EA. when they happen, rotation days. Not killed, but you won't make much money. They're very hard to make money out of rotation days. So what this does is it just locks in a loss and says, meh, didn't work today. So we'll sit here and we'll just take whatever loss we get at the end of the day. That loss is locked in and guaranteed. And you set how much that is because you set the risk. Or it will break like this. It will hit your second target, which in this case is 5R. And when it hits 5R, it will then short when we get some sellers come on board. And it just basically does that by placing a pending order underneath them. And then it will get you out of the trades. I'm going through the video. I'm going to record a video on this today and basically go through the video. I haven't even scripted it. I'm just going to off the cuff waffle like this. But that's basically what it does. So it's a much more sort of like relaxed way of trading the open. You will only ever take one trade a day. It will either work or it will hedge. That's it. And then you sit there for the entire day waiting for the market to do something. When am I looking to release it? It's out. It's already out. It's on the website. Stock Index Hedge EA. There. Done the manual. There's the manual. Yeah. I haven't done a video yet. That's all. But the manual talks about the strategy in detail. So here, look, all of this. Strategy. Yeah. And the basic functionality. This, what I've just said, basically, this explains all of it. I need it in video format because people can't be bothered to read, can we? Me included. I'm not saying anybody, me included. So this basically explains what it does. Yeah. So there's nothing wrong with the opening range breakout EA. Yeah, it works beautifully. It's a lovely edge, but on choppy days, it's really hard to trade because you can have really big losing days if you don't limit your loss. You can limit your loss in the EA and say, don't lose me more than X. But sometimes you can hit X within half an hour and it's very disheartening. This, if you hedge at the open, you just sit there and go, right, do what you got to do. I will wait. And you sit there and you wait and you've locked in a maximum loss for the day. You cannot lose more than the hedge. Yeah. Unless you exit one direction of the hedge and then it pushes against you. Then it can. But around about 35% of the time you'll get a clean break to target. Around 35% of the time you'll get a hedge, which will hit your second target and mean revert you out of the position. And around about a third of the time you'll have a hedge, which will go nowhere all day and you will just close it out at a loss. Yeah. So the edge is about 65%, which is good. Obviously, that's what we're looking for. It's not about trying to find a system or a strategy that works X% of the time. It's about finding a long-term edge, a set of things that play out on a regular basis enough that you can extract money from. And that's what an edge is. Yeah, it's not about finding the candlestick pattern that works 60% of the time, because it's not to do with the candlestick pattern. We covered this yesterday in a bit of detail, didn't we? It's not to do with the candlestick pattern. It's to do with the risk reward that you enter into at that pattern. That's what makes you profitable. The edge of this is the clean breaks make more than the hedges. Yeah. So as long as the hedges are less than 50%, it can't not make money long term. And we know that 65% of the time it is either a clean break or an exit from a hedge. So that's the edge. Yeah. And it's not pretty. It's going to have periods where it does that, as all strategies do. The opening range breakout has periods where it does that. And you're going to sit there and you're going to go, Jesus, I had it last week, didn't I? Last week, I think we got hedged 3 out of 5 days. I was like, when is it not going to do it? Today. And yesterday, it hasn't. It just clean breaks perfectly twice in a row. Thank you very much. It's paid for all those hedges. Just got to wait. People have got to be patient. And the beauty of this is it forces patience. When you get hedged, you ain't got a choice. You're in it. You're stuck. And you're looking at a P&L, which is a negative. But it will never change. That is locked in. That is the maximum. So you're sitting there. All you're doing is you're buying yourself the time. It's beautiful. I think it's beautiful anyway. I like it a lot. I prefer it to the opening range breakout. But that's me. Everybody's got a different thing, which is why I've got the two. Pick what you like. Everybody's different. Let's get rid of the 18 Indian people. What shall I report them for? I suppose I've got to report for pornography, haven't I? Report. Pornography or sexually explicit material. Goodbye, Indians. Indian porn people. Right. Pound US dollar, not adult stuff, please. Pound US dollar. So pound US dollar is rallying fairly nicely at the moment. We've had this before. So that's where we thought we were going to get the start of the move. What we actually got was a pullback drop. This reversal has held beautifully. So this last reversal we've had on the 4 hour has held very nicely. So that was the previous low. Yeah, we pushed down, sat down there for a couple of days, and then we broke up on that news, came back, retested it, the propulsion gap. So there's your propulsion gap formed by the accumulation break. Yeah, came back, added more positions, came back, added more positions, came back, added more positions. This market wants long. It wants long. So it's doing, oh my God, healthy FX here as well. What is it, spam day? Healthy FX. What should we report them for today? Be nasty. Promoting terrorism. Not that we can ever get rid of them because they just come back under a different account. But anyway, they're in Hamas today. Right. So yeah, broke to the upside. Beautiful adds. So the banks and institutions are adding to their longs. We had a nice break. So this is what is key, and this is in target today. If we can break that high today, obviously we're going to be running straight into the 24. There is support coming up in its bucket loads because we've been dropping for such a long time. So all these supports potentially are going to turn into resistance levels. So the good thing is the first one is all the way up there. So we've got a good run on this up to 123,710-ish. But we've got to break it first. So first hurdle is obviously breaking last week's high. The next hurdle is breaking the previous week's high. So this zone here, basically where the sellers tried to add back into their shorts, is what we need to break. If we can break that, we know the buyers are in control, and then we've got our W pattern reversal. Which means we've now got some strength coming through. We're running straight into 2 solid days of price action for the US dollar. So potentially this US dollar could go either way. Yeah, PPI figures, CPI figures, and FOMC, 3 of them in 24 hours. So there's a lot of movement coming on the US dollar. We've also got Bailey speaking as well. So I've got 2 lines on there. It's a horizontal that I've drawn, isn't it? I was going to say that looked like a cell line. So yeah, so it's looking good at the moment. We need that to continue. So obviously, where we've bought out of this propulsion move that on the hourly, yeah, we're just looking for that high to get taken out. That's achievable today. Yeah, so that's ADR today, and that is going to be the resistance up here. I need to change the color of this line so it's not looking like a cell line. Violet. So yeah, so this propulsion gap here, which was that leg, is where I'm expecting to find some resistance, which is 175 ADR away. So if we get negative news tomorrow, we're up here. Yeah, if we get negative news on Thursday, we're up there. Yeah, if we get positive news, I suspect we'll do hopefully something like that and hold. So I'm just, I'm close to getting out of this, but we need a little bit more of a kick. We need some news catalyst, basically. Thought video. That's a sensible approach to dealing with failed hedge exit. What's a sensible approach to dealing with a failed hedge exit? Just one attempt or a re-hedge. That's up to you. So I've done both. So the way that I am using this, and you see me using this in here all the time. Yeah. So basically what I do, if the break works, the break works. That's it. There's nothing else to do. I'm done. 15 minutes in today, I'm done. That's it. I'm out. DAX is done. I've made it. Walk away. If we get hedged, my thought process is one of two things. First of all, are we going to get an ADR day? There's two things that are going to happen. Are we going to get an ADR day? I don't know. If we are, I want to keep my 5R target intact, because when we get to my 5R target, we're going to be close to ADR. And at that point, we're going to get a little bit of an exhaustion, and we're probably going to be able to get out of the position fairly easily. If we're not going to hit ADR today, what I'm looking for is areas of support resistance to exit my hedges. Yeah. So today's not a good example, but let's say, for example, from here we got hedged and the market dropped. My target is at 5R there. Yeah. I don't see any reason why that wouldn't get hit today, because I would expect them to come down to yesterday's low or the previous day's low, which is way beyond ADR today. ADR is actually there now because we've moved up. But when we were there, ADR would have been that distance down. So ADR would have actually been there. Yeah. So I would actually set my TP here. So I would adjust my 5R target within where I think support resistance is going to hit. One or two things is going to happen. I'm going to be right. I'm going to exit the shorts. I'm going to have the EA take additional longs to average in so that I can get out of the trade in a profit. Yeah. If I'm wrong, I can re-hedge. Yeah. And I've done that. And what it does is, it locks in more loss. So if that hedge, if you're correct and you weren't right to get out there, you need to look for another level to take all of those shorts off, and then take more longs, and then you can re-hedge again. Yeah. There is no right or wrong with that. So the EA at the moment, and again, this is something that might get developed, is a re-hedge option. The EA will automatically get you in. So let's say, for example, we hit target here. Yeah. And we've got shorts on that we've got to get out of. So we've hit target, we've made 3 grand, 5 grand, whatever it is, but we're sitting in 6.5 grand's worth of drawdown. So we're actually 1.5 grand in the hole, right? To get out, the EA automatically places those new pending orders so that when we get the bears starting to take control, we trigger into a secondary short, which brings our average up to here, meaning that if we can push down just a little bit, that 1,500 will turn into a positive figure of whatever it is, say $800 or something, and we exit the position. We've made money for the day. What we can do when that happens, when we trigger that short, is if the short works, happy days. If the short doesn't work, we could re-hedge that level. So it's something that I'm going to look at as a potential version, update to the EA. I haven't tested it. What the testing I've done has shown that I don't need to do that. The days we hit ADR and beyond, i.e. this 5R level, gets exceeded massively, are the days there's news. So if you get hedged and there's news, I would say let the thing run. But this is a decision you need to make. There's no EA on the planet that you can program to just get it right, because it doesn't know. I don't know. It doesn't know. The market doesn't know. We don't know what's going to happen. So there is an argument for re-hedging there. So what you're doing is you're locking in $1,500 of loss there, or whatever your hedge risk is. And then here you will lock in another $1,500. So instead of having a $1,500 loss, you're going to lock in a 3 grand loss. But you've still got the opportunity to get out of it as the day progresses. What's the answer? I don't know. Just had a warning from the IMF. Inflation tenacity is weaker, and weaker global growth in 2024. Yeah. We know that. Inflation started to tick up. So basically all they're saying is, just to let you know, that some of these figures are going positive again. Yeah, I know that. So they're just saying basically, don't expect inflation to keep falling. It looks like it's bouncing. We know that. We've seen it with the US dollar, the CAD, and the Swiss. So, and probably we'll see that with the Euro and the New Zealand and the Aussie in the coming months. So they're just saying it's proving a lot more tricky to get out than we thought it was. So yeah, there's the answer to your question, Thought Feeder. I don't have an answer, but yes, the option's there. But at the moment, you'd need to manually manage that. And I think you should be manually managing things like this. You should be interacting with the EA. Like I said, if this was to break down and we'd hedge today, I would be not leaving target wherever the EA put it, which would be 5R. I would be putting target down here because I'm expecting limit order triggers at yesterday's low. So I adjust it. Yeah. But the EA will probably get out of it anyway if it got out of 5R instead of there. But it would probably be a little bit more painful. Yeah. You don't know, do you, at the end of the day? No one knows. That's the whole point of trading. If we knew, we'd do it. We don't. There is no way of having it right, if you like. There's a way of finding an edge long term and just waiting for it to exploit naturally in the market, which is what we do. But your human nature says, I want to be right all the time. So you're always looking for how to be right today. That isn't always the best approach. Can I check New Zealand dollar yen? Yeah. New Zealand dollar yen, we are sideways at the minute. So we're just pulling back at the moment. We broke structure here. And then obviously the intervention happened, which has shocked the market into not knowing what the hell to do now. New Zealand dollar's had a nice, good run. Yen is still holding up at the moment. So we've just filled the propulsion gap to the upside. So the target is to the downside. It's not really going anywhere at the moment. And I would only ever press the short button on anything against the yen at the moment, just because that's happened. And we know that last time it took 3 of them for it to actually happen and move. So if we've had one, there's another one coming. Or the market will naturally just do that. So the market will either naturally power up the yen or they will power it up. One of these two things is going to happen. And that is all going to happen based off the US dollar, which we don't know at the moment because it's just been sideways since the intervention happened 5 days. We haven't had any clues as to what the hell is going to happen next. So just got to wait. There's no setups on New Zealand dollar yen at the moment anyway. You had an entry. I didn't get this one. The reversal happened just before the extension. So didn't get the entry, unfortunately, on it. But, which, well, I say unfortunately. I wouldn't have been out of it anyway. But there is a potential double top reversal happening there. So you could take a short now. 15-minute reversal that's already gone in today, and the 5-minute as well. So you just had it there this morning. So up to you. Take it short. If it doesn't work out, you're looking for resistance above. So if you get in short now and it rallies, your second entry, I would say, is going to be there, isn't it? So take your short there, take your second short there, average in and out on a double top bounce. You will get a bounce. It's how far the bounce will be. Looks good for shorts. Amy, for me, the best thing on the SIH EA, you don't have a stop loss. Psychologically, I can't deal with stop losses. Yeah. Exactly. It's the whole thing about the psychology, and that's what the bootcamp is all about, isn't it? Position trading bootcamp is all about removing psychology. Yeah. Psychology is the bit that we can't beat. What we don't realize until we understand how to beat it is that you can't really change your psychology very easily as a human being because it's ingrained into you. So if you can find a way to remove the psychological part of trading which makes you lose, obviously it fixes the problem. So it's the easy solution. Rather than buying 100 books on trading psychology, reading them 100 times, and then trying it and realizing you actually can't do it, if you just remove the stop loss, the psychological part disappears, because the only reason you have a psychological problem with trading is because you get stopped out and lose money all the time. If you stop stopping out and stop losing money, there is no psychological problem. Ta-da! And this is what the SIHEA is about. It's the opening range breakout strategy, which is a fantastic edge, but the psychological part of it is always going to be there because it uses a stop. So the SIH EA, if you like, is the position trading version of the opening range breakout. So, exactly the same as taking this trade here today, as I just said. This trade here is a nice looking short. You got a 15-minute reversal alert. Yeah, and it's retested. So traditionally, you would enter short. You would put a stop loss there, and it will either come down to a 2R plus target and make you money, or it will push up and it will stop you out. That's ridiculous, and nothing wrong with that. The reversal EA and the reversal indicator is telling you should be shorting this. Whether it's right or wrong is down to the market movement. So the second option you have is position trading, getting short. If it comes down to your target, outcome's exactly the same as if you use a stop loss. However, if you don't use the stop loss, all you're going to do is you're going to enter another one and wait for the market to come down. That's exactly what we're doing with the SIH hedge. It's removing the painful bit of the opening range breakout. But the downside is, with the opening range breakout EA, you can have some much bigger days profit-wise than the stock index hedge EA will allow. There's always a payoff. Position trading, you use a much smaller position size. So therefore, on the ones that work out the box, you don't make 2% profit, you make 0.5% profit. But it's safer and more psychologically easy to trade. There's always a plus and a minus to absolutely everything you do in trading. There is no way of avoiding that, unfortunately. Since I trade without stop losses, also with the market reversal and the ADR strategy, I make money. Exactly. Of course you will, because you're letting the market move. You're letting the market do what it wants to do, move up and down and make money for people. Basically what the banks do, isn't it? Just wait for the market to move into profit and then take the profit. Think of it like, it's a really good analogy to use the stock market, yeah? If, let's say, for example, you want to invest in the stock market, right? Or a pension. Has any pension advisor or financial advisor ever said to you, right, okay, you want to get into stocks. Okay, so good stocks to buy would be things like Apple, Microsoft, Tesla. Yeah. So do you want to go ahead with that? Yeah, brilliant. Okay. So when would you like to get out? Well, I'm investing in the company. So, as they grow, I'll sell the shares off in the future. Yeah. But if the stock price comes down, when do you want to get out? No investment guru or pension advisor has ever said to you, where do you want your stop loss to be on your stocks? Yeah. Why? Because they go up and down all the time. Why do you do it in here? It's nuts, isn't it? Think about it. Why would you do it? Why would you put an order in to say, all right, I'm going to buy Tesla, Microsoft, and Nvidia. If they drop by 2%, though, I'm going to sell the stock at a loss. Then what are you going to do? Well, I'm going to buy them again. Why? So you're saying they're going to go up again? Yeah. Well, why'd you sell them at a loss then? Well, because I want to buy them at a better price. Never do it. You never do it. What you might do is add more stock as the price comes down in anticipation of a rally on good earnings. But why do we never do that here? Food for thought, isn't it? Think about it. Everybody using a stop is quite stupid, aren't they? We know that because we're making money by not using it. Thought video there makes sense. It's just how to exit a proper trend day if hedged is concerning. When it just keeps pushing. Yeah, you're going to make a loss. You've got to accept, thought feeder, right? This strategy, every strategy is going to lose a lot, right? They all lose. All strategies that have any kind of mechanism for losing will lose. Yeah. So let me show you some screenshots. I don't know, I'll just start there, pick something at random. Right? So this day here collapsed. Yeah, so that's ADR. We hit ADR, and then we bounced off Right, this is the DAX. So this is the Frankfurt session. This is the New York session. Yeah, the New York session did over. So we dropped by over 100% of the average daily range. We bounced back by over 100% of the average daily range, probably 150. So we did 125% roughly to the downside and 150% back up to the upside. That's 250 or 275% of its average daily range in a day. Days like this are going to be bloody hard if you're hedged. This one was a beauty. It just dropped and we went, thank you very much, walked away with £6,000 profit. If this had hedged, your decision is, when do I get out of my short, right? Now, the EA would have automatically exited your short for you there and waited for the bounce and got you out here. So it would have still made money on this particular day, no problem. If, however, this had collapsed and just gone like that and then collapsed another ADR, you're going to hurt bad because you have just got long positions on which are going more and more and more into drawdown. There's nothing you can do about it. You just have to accept it. There's going to be catastrophic loss days, but you can avoid them because 90% of them, from what I've seen, happen on news. So when you've got news coming up, and the reason it happens is pretty obvious, but when you move fast and hard in a day, when there is a news event scheduled to come later, i.e. we've done roughly an ADR, and then we've got a news event. If that news event is a news event that drives it in the same direction as the original break, you're going to do a 200 ADR day. So if you're in a hedge and you're down here, I would leave it. Yeah. There's a good chance it's going to do that, but there's also a good chance it's going to do that. Just take the hedge loss. Don't try and get clever, because those are the days you're going to get hurt. If it gets you out at 5R and you've got a news event coming up in half an hour, I'd put another hedge in. Just in case. It might work out and you're like, thanks. It might not, in which case then you take 2x loss. But don't let the thing run forever. Yeah. And in the back testing, you'll see this happening. I'm just going to try and find, there you go. So that's $7,600 loss there, right? In that hedge. Now, if you look at the exit of this, so this was some back testing. So this is actually using a 4R exit instead of a 5R exit, but the 5R exit would have been there. And this is why I'm using 2 and 5. Important point. The 4R on this day made a $7,600 loss. The 5R on this day actually only made a $1,500 loss. Big difference. This is why I'm using 5R, because the back testing has shown that is much, much better in a long way. And this is why I exit at end of day, end of session on the DAX. Yeah. If you exit end of session on the DAX, you take that much loss. If New York, who has news events, decides to continue the rally, look at the difference. That would have been what? I don't know, 10, 15 grand? Don't do it. So ignore, this is me basically taking auto screenshots to test. And you can do this with the EA. The EA will do all of this. It will take these screenshots. So you can back test all different scenarios and then sit here and just go through all the different scenarios to test, to visually see what would have happened. What's the best thing to do? When it goes wrong, why does it go wrong? So you can look through and go, my God, there's a 25 grand losing day. Yeah. This is part of my back testing process. I want to find why this goes wrong. When does it go wrong? So you know not what not to do. The reason this went wrong is because we tried to hedge out of a position after it had done 150% of its average daily range, and then it put in a 200 ADR day. Go back and look at this date, 27th of January. It's a news day. Yeah. So it tells me that if the hedge is locked in and there's news coming, get out. Yes, it could have done that, but it didn't. Yeah. So, you know, this is what the whole purpose of this EA was originally built for before it turned into what it turned into, was to do all of this analysis. I've got spreadsheets that this exports as well in my development version, which gives me all sorts of data about how to and how not to make money with the hedging. And that's why the EA's got the settings it's got in and why it does what it does, because I've exported years and years and years of data which shows where the edges are. You know, the clean break days. You know, like I said earlier today, the stop loss will stop you making money on these days, right? But it will guarantee you make a decent money on these days. Now, that scenario could have been that. It could have been that. On the days where it was that, you'd have been going, haha, glad I got a trading stop. On the days when it's that, you'd be going, damn, I wish I didn't have a trading stop. You don't know. So you just choose one and let it play out. It's all an edge. Every single version is an edge, but which one? Don't know. Some days, yeah, this range here on the 5 minute was too small. The range was 145. The minimum we want is 10%. Statistics have shown that anything under 10% has a higher probability of whipsaw, 60 to 70% of the time. Above, it's less than 50. That's why the 10% is there, because statistics have shown that you get whipsawed more. So it didn't take this one. Jesus, wish we had. What's that? 5, 10, 15R? Wish I'd have taken that long and not got out of it all day. You don't know. No one could have predicted that happening. Look at the pre-market range. It was absolutely tiny. Sometimes when it's like that, it goes like that for an hour, and then it does that. You don't know. So the long and the short of it is, every single time you look at these screenshots, you go through them, there is no solid edge that works every day. It doesn't exist. You have to find something that works a majority. That's where your edge is formed. Yeah, and that's what the EA is doing. And these are the days it works. Yeah, these days where we get these nice breaks as we had yesterday and today. If you get 4 of them in a day, DAX, DOW, S&P, NASDAQ, you won't need to work for the rest of the week. And you will get them regularly. Yeah, that's where the edge is. Stopping as well. Stopping. And this is what the hedging does. It stops you from over trading, which is why it's such a nice strategy, or variation on the strategy. Yeah, look at that. Beautiful. Straight in, hit target. The break-even stop made sure we guaranteed 3K instead of 1.5K. So this day, it was like the trailing stop made us twice as much money. Then it went back and sat there for the entire session. And then the New York, you took the pre-market range you break in New York, you made that again. In fact, you probably made about 7 grand on New York that day. So that whole day in New York, on 2 indices, you'd have made 7 grand. I probably would have done something different. You made 3 there. Yeah. 18 grand on 3 instruments, one day. Stop. You've paid the mortgage for the month. Off you go. Do something else. But this is what all this testing is for, is to show what happens. Where are the pitfalls? Yeah, and you can do all of this yourself, which I'll cover in the video when I do it. It's just a nice way of making money, isn't it? But there is no, you know, when you've seen all of those big days that are like crippling losses, you'll know what not to do. So when it gets down to that 5R and you're considering going long and not hedging that position, because you've seen what I've seen, you will hedge it. You will make sure that you take a 3K loss instead of a 1,500 loss on that day, because it could turn into a 16 grand loss or whatever. You know, it's all percentages of your account, isn't it? But yeah, the big ones, you can avoid them. You just need to know how. So that's all covered. You know, and this is what the EA does. It screenshots every single day you test. Yeah, I have done analysis on the DAX for years. Every day. I can go back to any period in time and go, right, what happened on non-farm payroll day for the last 15 years? I've got a screenshot of every single one of them. All that analysis can all be done with it. Very good. Well, I think it's very good. Different people want different things. Other people want to just buy something, stick it on a chart and go and make money, don't they? Don't we all? Dallas, I never use stop loss. I wait maybe a while and get in at the best price possible. Treat each trade like an investment. Well, it is an investment, isn't it? What time do you stop the New York session? 5 minutes before. So the DAX stops at 14.25. The New York Open is 14.30. So that's 2.25 UK, 2.30 UK. Yeah. Every broker has a different closing time. So this is why you've got these inputs. Yeah, you need to match this up to your chart. So on my chart, The DAX open is 10 o'clock. This is all covered in the manual. Yeah. Yeah, so it's all covered in the manual, how to set it up, how to find the open time, your broker. Yeah. Same as the opening range breakout EA. Then you just input these times. You only got to do this once, but you have got to do it. You've got to make it right, obviously. So, right. So just going to cover the open positions before I go. So all I've got on at the moment, as you can see, the main thing that is in drawdown at the moment is the pound US, which is rallying at the moment. And as I said, if we can get this double top broken this morning that we formed at the Asian high and get out of this last week's high, we've got a very good chance of getting a run. I'm not sure the run's going to happen today, but we've got all these news events coming up. So if by any chance we can get a bull run on the pound US today, which takes us or takes me back to a break-even scenario or thereabouts, I will close this. If I can get this down to maybe 1% loss by end of day, I'm not going to hold this over the weekend, over the news. If I hold it over the news, there's a high probability that will happen and I will be going, oh, that would have been so much money. There's a high probability that will go down and I'll be stuck in this for another month. So I just went out. I can close it right now. I've got 8.37% banked this month so far. I could close this out, walk away and go, right, reset. I'll take the 5. But I'm going to give it the benefit of the doubt at the moment because I think they may weaken into the news. So we'll see what happens. The other reason I'm holding is because the main news we've got Thursday morning is this GDP figure. So I'm hoping that the market is going to see this forecast and try and buy into the pound ahead of the news. So I'm hoping that we're going to get the pound rallying before the news and then buying on anticipation of the news being positive. And because this PPI figure is forecast to drop, I'm hoping they're going to sell the US in anticipation of weak numbers. So the forecasts for the news Wednesday, Thursday are bullish pound US at the moment. So that's why I'm holding at the minute. But if this does 100 ADR today, I'm done. It's fantastic, minus the swaps. So I'll still take a loss on it. But, it'll be small. So that's the main thing I've got on at the moment. Aussie dollar Swiss. So I've got Aussie dollar Swiss on as a long. So this is the H1 M5 mean reversion entry from all the way back here. So we've sat sideways for 5 days now. Yeah. Looking for the propulsion gap fill. Just not going anywhere. So yeah. I'll see what happens, but if by the end of the day we're back up at the highs up here, I might just take this off and go, screw you, I can't be bothered anymore. CAD Swiss got long on, same scenario. So this was taken on the H1 M5 mean reversion there. 1, 2, 3, 4 days sideways. We've got this propulsion gap at the moment, holding price down. They're adding into their sells. They're not letting it back up again from this area. But this is a very, very tight range. Canadian dollar, I have full faith in oil rallies. Therefore, CAD rallies. Therefore, that's where I'm looking to go. We need oil to not be an idiot. Only thing hovering over oil is OPEC might come out and say they want to uncap production, which will drive prices down. But we'll see. Nothing we can do about that one. Euro Swiss, but there's only one position on it. So, both of these, there's one position on. So it's not the end of the world. Euro Swiss. So this one is in profit at the moment. This is the gap fill play to the upside. Yeah. So looking for that to move up to the gap fill. Every confidence the gap fill will get done. It might take a week or so. I have no idea, but looking for it to move up. Euro New Zealand is in profit. That's nearly at my TP, which is just under propulsion, which is just above ADR. So this break we had to the downside, I'm looking for them to retest this. Hopefully they're not going to pull it back from there, but looking for a push up into there and then potentially continuing on our downward journey for the euro. As I said, Not sure about euro strength. Pound odd, but there's only one position on all of these. So pound odd in short at the moment, looking for a pushback down into propulsion. Double-edged sword, this pound. I'm long and short. So tricky. We've got no news coming on the Australian dollar or the New Zealand dollar this week. So this is a bit of a tricky hedge. In fact, what I'm going to do today is I'm just going to lock that in. Is that 400 or 40? Yeah, it was 400. So I'm just going to lock that in with the trailer, just so I don't take a loss on it, because I am hoping that they buy into the pound. You know, if the Australian dollar for some reason has a massive rally, which it could do, fine. But otherwise, don't know. Pound US dollar covered. New Zealand dollar Swiss, I'm just locking in, so I can't lose on it. New Zealand dollar Swiss, long on that one at the moment. Sorry, short on that one at the moment. Got two positions on, not really going anywhere this at the minute. So I had initial entry taken on this one all the way back there. So we've been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So 2 weeks solid sideways on this. Had a third position on which I took off. So this was actually a profit on the total position. But we broke that low quite convincingly, and I was expecting a retest of the propulsion gap and then a push down. So this propulsion gap here, which was the break of that low, I was expecting a retest and a drop. What we got was a retest, and we got a drop, but then we've retested that second propulsion move and just sat sideways and gone absolutely nowhere. So this thing's just ground to a halt. So I'm not far away from a break even on it. There's only two positions on. That one up there, I'm already obviously taking a nice profit on. So if we do push back up and don't invalidate that high, I'll be adding a third position up there, and then bring the average back up and then wait for a downward move. That is the Swiss franc interest rate. So I'm targeting the propulsion gap after the break. So the second leg of movement, which is 200% of ADR. So just looking for it to come down there at some point. Obviously, all the news on the US dollar is going to rally everything all over the place in the next couple of days. So there's a good chance that the Swissy will have a load of money pumped into it if the US drops. The US pumps, don't know. But so in New Zealand dollar Swiss, but been in it for 2 weeks. New Zealand dollar Swiss, yeah. US dollar Swiss, short on that. That's nicely in profit. It's close to target, that, isn't it? I'm gonna trail this 240. Just locking in, basically. So target is down in propulsion, but there's no point in letting this run go. So I've already banked on this twice. So as you can see, initial entry was here, which was on that H1 RSI extension. There was a trade there as well, which is a quick short in and out, which was the Swiss franc interest rate, which I mean reverted, and I got out because I was worried about the bounce. Thankfully I did. But we took the second entry there, and then took another one there and another one there, exited both of those. Yeah. Expecting it to continue down, which it has. So this one's now in profit. So that's a nice profit overall on the position anyway. So this is just bunts really on top. So if it gets down into propulsion and we return to origin of the move, great. If it doesn't, great. Not bothered. And the other thing I've got on is US dollar yen, obviously. So this is my, not so much worry, but I've got a fair bit of size on this. I've been in and out of profit on this. And as you can see, I've already exited some. So I've banked, I can't remember what I banked on it. 3, 4, 5. I banked 0.5% on it, on that move. And as you can see, I'm sitting in a bit of drawdown on it, sort of 0.4%-ish. So I can exit this whole thing now and go, right, the intervention didn't work. And that's kind of going through my head every day at the moment, because what we're getting is just flip-flopping around my P&L, around my break even. However, that move there has kind of given me a little bit of faith that we have got some yen buyers on board, because the propulsion move, they did rally straight back out of it when we retested. But there has been news which has helped this along the way. The thing that worries me about this one is we've got 2 days of news, and if it all comes out bullish for the US, this is going up to there, and that is going into drawdown, and there is a fair bit of size on it. So I'm kind of looking at this today thinking, if we're back down here, I might just exit ahead of the news. If it dumps, it dumps, but I don't really want to risk having to wait for the second intervention, which could be weeks away, and it could be weeks of sitting in drawdown up to 152 with a little bit more size on than I actually want to have. So I'm watching this closely, and I may well exit. I might regret it. I've been waiting for this intervention move, as you know, for weeks and weeks. We finally get it, and it doesn't play out. Nothing you can do about it. If I'd have taken everything off that I had on when we got down to that double bottom, which was down there, that would have been somewhere in the region of 4-5%. It happened within a minute. I couldn't get out. I didn't have, so basically we were in here, weren't I? And somebody, the chat just went nuts and said, look at US dollar and yen. By the time I'd seen the chat, looked at the chart, the retracement had happened. So I couldn't get out. But I just don't think it's moving fast enough. There's not enough. What normally happens on an intervention is they scare the crap out of the market goes, screw it, sell everything, buy the yen, and they rally the yen like nuts. That hasn't happened. So if it hasn't happened after 5 days, it's not happening, is it? Look at all the others. We've got things that are actually making new highs on the intervention move. Yeah. So I don't like it. However, I do like the fact that we still got some US dollar weakness at the moment. So it's a very tricky situation, very tricky position. So I'm monitoring that one. And the other position I've taken is oil. As I said, first position taken. I don't know if we are going to get the gap fill or if we're just going to run. So, but plan for that is long. Second entry, average in at gap fill, if gap fill is required, for a long. And then looking to get out of one position as we get up to there and hold. We'll see what happens. So that's what I've got on. Thought period. Switching to FX. Any ideas why the market reversal EA has taken me in on Euro Swiss long when the 1 hour RSI has not extended? It was extended. I don't know what time frame you're using, what set file you're using. I don't know anything about your settings. There's 1,000 reasons why that would have got in and should have got in and did get me in. So yeah, I'm in because it was extended. But I don't know. You could be. I don't know what level you're using, what set file you're using, whether you're trading 5-minute, hourly. It does what it does. Whatever you set it to do, it will do. I don't know the exact reasons for yours, but I'd be thankful if I were you. It's going up. Does the free demo of your market reversal alerts indicator for MT5 still work? Yeah. All demos work. In the strategy tester, that is. So all demos from MQL5 Marketplace work in the strategy tester. They don't work on charts, only in the tester. Tester's there for you to test. If you want to use, you buy Marketplace. So. Right, so that's all I've got for you today. Just keep your eyes peeled on the news. There's a lot of IMF news coming out. Global GDP growth are dropping. China mulls new stimulus and higher deficit to achieve growth target. US growth forecast to 2.1 and 1.5 in 2024 citing stronger business investment and growing consumption. Japan growth target to 2 versus 1.4 estimate. So they're forecasting economic growth, GDP increase. Across the board. See what that does to the markets today. Certainly having a positive effect on some. Okay. Right, so I'll leave it there. Anything you need, let me know. I'll be in Telegram. I'll be back this afternoon at 2:20, and we will trade the US Open and see if we can get some decent breaks this afternoon. I'll be back tomorrow morning, obviously usual time, 7:50 for the Frankfurt session. I will aim to get my video done this morning for the stock index hedge EA. Just to go through the strategy, whys, what's, pretty much everything I said this morning, but hopefully a little bit less waffly, but knowing me, it will be waffly. And then go through all the inputs as well. So the whole point of the video I'm going to make is to go through the inputs. It's all covered in the manual, but it's much easier to watch somebody do. So I'm going to do that. So that's my morning. Anything you need, let me know in Telegram. Otherwise, I'll be back this afternoon. Hopefully you have a good day. Everything seems to be going in the right direction at the moment, which is good. So we'll see how we get on this afternoon. Might well be out of this pound US dollar today if that continues to pop, because we've just tapped straight into that last week's high and seem like we might get a rally. If we break that, there's nowhere to go but up. So could be flat today. That'd be a shock, wouldn't it? Right, I'll leave it there. Anything else you need, let me know. Otherwise, I will see you guys this afternoon. If not, tomorrow morning. Have a good day.